Yeah. Assalamualaikum. Bismillahirrahmanirrahim.
Are we audible? If somebody can just respond. Chat में देख लो कौन. Yes. Okay. Thank you.
So the way we will do as in previous years also, just go through this presentation, and then after this presentation, we'll have a Q&A session. So let's start with the presentation. I would really want to welcome everybody today's morning, and wait for a minute for everybody to come in. Yeah, let's start. So this is a brief plan that we will follow for today's presentation.
This has already been uploaded on the web.
This is already uploaded, so I'm sure
Share on this also.
Yeah, most of you have seen this. I'll just go quickly through it so that we have more time for Q&A. So I just want to point out this our vision, which is very important, not to be the largest or otherwise. This is to be the most respected financial institution based on trust, service, and commitment. We are a Habib family company, so these things are, this values and this vision is very important for us. So the group, you can see, this is there. There's only one change, which was there last year, Habib Metro Exchange Services, but that has become operational during the last year, and it is our 100% owned subsidiary. And otherwise, this is how our ownership remains. Majority shareholder is Habib Bank AG Zurich, and that's a company which is based in Switzerland. It has its regulator as FINMA, which is a source of pride for us. This you must have seen, but this is what our I thought that we will show you our average daily turnover. Stock prices little change in shares outstanding. This is our management team, and it is roughly divided between our two main lines. One is business functions, and that has largely remained unchanged. And except we have our treasurer, Ayaz, who's here. In the support function, again, very similar, very experienced people that you will see. What I am, I'm sure our board is also very proud of this management team. You can see this is very well diversified, very well experienced. It's a mix of banks' own homegrown talent, as well as mix of good talent from the market. And this is one of the big differentiating factors for us. So let me just revisit this or remind everyone of our strengths. I think one of the biggest strengths is our loyal customer base. We have customers that date back to first day of the bank, and a large number of people who opened accounts with us when the bank was set up the initial years, they are still our customers. whether those customers are companies, small businesses, or individuals. It's a very loyal customer base. So therefore, we are a very customer-focused bank. We get loyalty from customers, and we commit to customers our best service. The other thing which we think that this differentiates us from our peers is a strong parent bank. VBank AG Zurich is a very well capitalized bank. It's a very well regulated bank. It is one of our main strengths. Bank AG Zurich. We are, as we were always, one of the leading trade finance banks. You will see that as the country's trade has grown last year, we have also grown in this. We plan to retain our position of a trade finance bank. We think trade brings wealth. It creates wealth for companies, for individuals. So we want to be part of it. We also have a stable non-funded income. You will see that it has been growing very well over the last 5 years as a result of, among other things, trade business also. Well-structured Tier 1 capital. We have you will see that's a very well capitalized thing. It is in line with industry. However, we feel that we rely only on Tier 1, unlike some of our peers who have Tier 2 also issued. Our rating with Patra has been AA+ for a very long time, 24 years. I personally feel that we are up for an upgrade, but let's see if rating agencies agree or not. Interesting year in 2024. Our current accounts grew by 8.3%. Advances grew by almost 15%. Islamic current deposits, they grew very significantly, 78%. And non-markup income, another feather in our cap, is this growth of this. We also, as I mentioned earlier, currency exchange has started working. The network is growing, and the results are very satisfactory. We also remain part of this Hajj collection. We are number 7 in the industry in this. So this is generally a good set of results that you can see here. Balance sheet KPI, you will see total deposits. This is the first time we have a dip in deposits. We have been growing, as I said earlier, for us, it's not really, the size is not something which is very mandatory. But our customers have been growing, and we have been growing deposits. The only thing is, because of interest rates and some other reasons, we had to shed some of our very expensive TDRs because of interest rates the way they were. And you can see that there is a small reduction there. And now you will see current accounts, they are continuing their growth. And this is CASA current account. That's a source of pride for us. This is customers' trust in us, and we take our depositors' money very seriously. And so this is gross advances and ADR. So if you look at our ADR over the last 5 years, it has roughly remained at the same level. Last year in 23 there was a dip. Otherwise, we have been above 50 for most of the time, or around 50. We are still there. There was this consideration also of a tax. So we are above that mandatory 50%, but then that tax will have gone. Total asset is also slightly reduced, but that's primarily the result of when you have some reduction in deposits. The total assets will also, but it's not a huge reduction. It's not a strategy. We have started growing and we will continue to grow our deposits. As I said, deposit is the first thing we think. Depositors are the most important customers for us. Profitability since 2023, because of trade, you can see that our profitability has gone up quite significantly. It has remained at that level, roughly unchanged from 23. The thing which I mentioned earlier is our growth in fee income, which has come up very well. We actually roughly we have doubled from 2020 to 24 in 4 years, and this is on the back of the value-added services that we provide to our customers. Operating profit again very satisfactory, highly elevated, but this is in line with our 2023 numbers, roughly same. And overall profitability is also in line with last year. It's a slightly more than 2023. We were like other peers, other banks in the industry, hit by a far bigger tax bill because of 5% additional tax that we paid in December. Last year, tax bill was higher. One reason was this windfall tax, but this year this was additional 5% tax. So therefore, you see this very high tax bill, which is over 50% now, 53% approximately is our effective tax rate. So similar successful, satisfactory story in our EPS, close to 2023, slightly better than 2023. And because of that, our dividend payout has been very, we feel it's a very satisfactory story. Last year, 2024 was the first time we paid quarterly dividends. We used to pay half yearly earlier, and so quarterly dividends, and you can see it's a very, very good payout ratio. Last year, the ratio is about 50%, and this is for the shareholders. We feel it's a very good return. We are sharing our success, our profitability with our shareholders also. So I think it's a very good mix of keeping money for growth and also paying shareholders. P, it's a factor of price, breakup value of share, as well as share price. This has been in line with our industry growth, but breakup value of share is something which is due to retention of profit, and you can see that it is continuously improving. And there were times when obviously it is in line with industry more than the share price. Cost to income ratio, we are very careful in this, and we remain very cost efficient bank. We believe not, as I said earlier, size, but we believe in efficiency. So you find efficiency ratios generally good for B Metro Bank. This cost income ratio, I think that two banks I think which are better than us. However, we remain among the better ones as far as management of cost income ratio is concerned. This we feel is a long-term competitive advantage for us. Return on equity, very satisfactory, slightly less than last year, but it's a very satisfactory, over 25%. Similarly, return on assets also is also very satisfactory by any standards, global or local. So we are in line with last year. Asset quality, as one would expect, because of higher interest rates and lower GDP growth, there was pressure on our asset quality. We have new NPLs, as anybody would expect. That has grown. But we, despite our best efforts, this had to grow. There were industries which were under tremendous stress, so for them it was difficult for servicing their loans. Still, we remain consistently better than industry. We feel that this infection ratio, which has gone from 4.5 to roughly about 5, we think that in the coming years, with this improvement, some stability in industry, reduction of interest rates, this will, we feel that it has stabilized. I think it will improve, if anything. We remain a very prudent lending. Our credit risk management is something which one of our specialties. So we feel that it's a competitive advantage for us. Because of this better interest rates and better GDP and economic environment, we feel that there will be robust recoveries in the years to come. We have had robust recoveries in the previous years also. So asset quality will remain a big part of our focus. Capital adequacy, CAR is very satisfactory. We noticed earlier that our Tier 1 capital is almost 100 billion, 99.7. And this is, when you measure us on only Tier 1 capital adequacy ratio, this is a very satisfactory picture that you see. Overall, CAR is also very satisfactory. And this is being a conservative bank. We feel that this is a good buffer for our growth in the future years. So this is a very well diversified group, except for textiles. So as I said, that we are a trade bank, and in Pakistan, more than 50% of our exports is textile. So you would expect to see a huge concentration in textiles. But as a percentage, we have been reducing it. While absolute numbers, as obviously customer needs are growing, so we are also supporting our customers. But as a percentage, every year we improve it, we diversify it more, and this is the same story this year also. We don't expect that there will be a time that we will not have a high concentration in textile, simply because of our trade background. However, this has been a success story that as a percentage we have reduced this thing. So this is our investment mix. 96% is federal government securities, 4% is others, of which we do have a small portfolio of district shares, but that's a relatively small. You can see out of 4%, that's only about 29, which is about 1% or so of the overall. In federal government securities, it is again a good mix. As a part of our ALCO, we analyze this position. We remain dynamic depending upon our interest rates view, what we have, and we do have a strategy of how do we go about it. It is primarily PIBs that you will find here, and then it's a nice mix of Ijara Sukuks and T-bills. This is part of our deliberate strategy. Now, Sirat is the brand name of our Islamic banking. Islamic banking, we decided a few years back to be our main focus area. one of the several growth areas. Sirat is an international brand. Well, it started with Habib Metro, but now the group is offering the same brand in several other countries also. So that would give you an idea that how successful is Sirat's reception in Pakistan. And you will see it's a huge success story for us. Bank is not really being a bank which don't believe that it's doing something extremely on one thing only, but Sirat is one thing where we can see that we have had a lot of success. The CAGR of all growth is very good. One point that I would want to show, which is that we have our advances have reduced. But this is primarily because of last quarter, in which a couple of our we take part in government's commodity finance operations. And there is a system of quarterly bidding in that, which is on the base of rates. So in the last quarter, we were not successful in one or two. That was a competitive process. So we lost. So therefore, you see, this is a temporary dip year end that you see. We had taken decision that all commodity finance will be done through Islamic. So we have subsequently recovered, but this is a small blip that you see there. Our branch conversion remains a very big success story for us. As you can see that from 61, 117 to 223, this is over 40% of our branch network today is in Islamic. Additionally, we also have sorts of windows. Overall, the coverage of Islamic for our customers is very satisfactory. Financial highlights of Islamic, the similar story. Bank's total assets, 18% is Islamic. Deposits is also similar. We feel that this conversion of branches will help us catch up and increase this thing. We will find that all the growth ratios for Islamic, they're very, compared to last year, they've gone up very significantly. Islamic financing is the only place where you can see a negative number, but that's only because of that particular commodity finance that I mentioned that we lost on a competitive bidding. Digital update. Digital is an important play for us. Also, more so than many other banks because we have a relatively we have our branch network is augmented by this digital. The digital income, while it has grown in 24, I don't expect it to for the industry not to really. It is a lot more digital has to do with the way we are doing banking. And if you see all the percentages of growth, whether it is debit card spend, we don't have a credit card, but our debit card is a very strong debit card. It's a Visa debit card. Similarly, mobile app, our mobile app is one of the better rated mobile apps. Similarly, Rust transaction values, if you see how that has exploded, almost 86% increase over last year. Similarly, transaction volumes, everything 60% up. So digital remains and digital will be a big concentration for us. We have high hopes from our digital offering in the years to come. Branch network 551, we feel this is a very satisfactory number. If you see the coverage we are present in 221 cities. So everywhere where we want to be, we are there for our customers. It's also, you will find that it is in line with generally how the banking spread is. This branch network, we find that this is in line with our strategy of growth, but controlled growth. And because we feel that digital is going to come and this branch network will be augmented very significantly. CSR remains a huge focus for our group, and therefore you see large spends, large budgets. Our priorities are unchanged. We defined them many years back. It is education, healthcare, DEI, and rehabilitation primarily if there is a natural disaster. So last year it was a lot more in education and DEI and healthcare. Some of that you can see here. The top left picture is basically our board opening Indus Hospital's new building in Karachi. Similarly, you will find in the second picture it says school in Hyderabad, and then similarly SAUT and others. So, focus for 2025 not very different from what we have been doing. As I said earlier, low cost deposit, Islamic banking, transaction banking, and employee banking are very have been a huge growth area for us. And we plan to continue to deepen here also. Digital banking, I've already said. Trade leadership, we want to retain our trade leadership. Remittances, we have been always in remittances, workers' remittances, but in the last 3 years, we have grown this quite well. Put up a much bigger team and systems and investment in alliances and systems that has started paying dividends. So this is growing nicely. So growth in core income will remain. Asset quality, I've already said, recoveries, I've mentioned that we think that this economic environment will help us. Customer centricity, everything that we do, customer is the center of it, so that will remain. Talent diversity, we have in line with State Bank guidelines also, but in line with our board's guidelines, we think that we have done very well here. Our diversity ratios are very good. Shareholder return will remain focus. Rewards have been there for last year. Some of them you probably see Islamic conversion. This is also PSX award, the top 25 companies. This is second year running that we are part of it. We also got the CFA Society Mid-Sized Bank runner-up award. So, yeah. So thank you very much. And now, I think me and my team, we are open for your questions.
So can you please raise your hand so that we can
We have a question on the chat box from Syed Murtaza Hasan. Will you please provide guidance on the following: deposit growth and media target for 2025?
So as I mentioned, deposits have started growing very nicely, and we expect historical deposit growth, which is like mid to low teens type of deposit level. ADR is, as I said, again, we are long term. You have seen our ADR ratios. I expect it to remain that, whether tax or no tax, ADR will remain where you have our long term. It's not going to be very lopsided either way. So,
second question is, they are asking for current account mix target for 2025.
It's in line with what we today have. There is this as the banking requirements of the customers are changing, so that could change a little bit, but not really a huge.
The operating expenses were up 12.5% quarter on quarter. Can you please provide guidance on it or a target cost to income ratio?
to remain within under 40%, so we'll try with that.
No specific
target.
Interest rate outlook for 2025.
interest rate outlook. Ayaz, you want to take
I'll take a stab at that. So basically, inflation has been quite timid over the last year. And where we are right now, we're expecting a decades low CPI reading for March. However, I think the core inflation has proven a lot more resilient. High frequency indicators have also started showing signs of recovery. Furthermore, imports have started pushing up in light of the decreasing, trade cycle, in the absence of any material external flows. So we expect the regulator to continue to be judicious and gauge the impact of all these cuts, 10% cuts that have happened over the last 11, the last 7 MPCs leading up to the pause there. We also expect them, to adopt a relatively tight monetary stance in order to, rein in inflation between 5 and 7%. That is there. That has been their midterm target. Furthermore, I think the trade escalations have added a new uncertainty in the global environment, and we've seen a lot of regulators and central banks holding rates in the recent past. Hence, we feel we've come to the end of the easing, or close to, or at the end of the easing cycle in Pakistan here as well.
We have a question on treasury. Can you please share the mix of fixed rate PIBs in the PIB portfolio along with its average yield and duration? And they're also asking about the mix between floating and fixed PIBs hedge.
So basically, if you look at it from an holistic point of view, 55% of our portfolio is fixed, and 45% is floating. The 55% of course includes treasury bills. So if I want to just give you some more granular details, the fixed portfolio, excluding treasury bills, is around 38%. The average life of that portfolio is around 1.8 years, and the return on those investments range between 13.75 and 14.25%.
We have a question. Since the budget is around the corner, is there any tax-specific news or developments on that side?
We're already, I think, one of the highest taxed people tax industry. So I think, in my view, frankly, there is a good news that it will be 1% less this year. Last year it was 54. This year it will be 53, and hopefully every year it will come down by 1% as promised, or as well. But I don't have any special information on this. But I sincerely feel that that this 1% reduction is what we should get, and we are already very, very highly taxed. Actually, everybody is taxed individually as well as institutionally.
We have a question on new branches for 2025, Islamic and conversions.
So we have what we call ABEP, which is Annual Branch Expansion Program. We have approval from State Bank under that. So what we have done is that it's in line with what are generally you will find every year that we expand branches. Of that, most of the new branches will be in Islamic. However, it's not 100% because of customer requirements. There are certain areas in which customer does have specific conventional branch requirement also. So we have to keep that eye. If it is up to us, we may actually do 100% new branches into Sadiq. However, it is customer requirements that we have to look at. Sorry, Sarah.
How much repo borrowing do we intend to carry in 2025?
I mean, if I may, it's basically funding require. It depends on funding requirement. And secondly, of course, if you look at the yield curve right now, a major portion of that, especially the shorter end of the curve, entails carry. So basically, of course, we were a very prudent bank, a very, very judicious bank. So we have to work within our market risk parameters. And of course, we have to see if there is value in putting up these that repo book in order to take this conversation forward. I think on an average, we've been there or thereabouts between 150 to 250 billion in the last couple of years, and I think that's a fair assessment going forward as well.
We have a question from Topline Securities. With the decline in interest rates leading to an earnings decline, can we expect the bank to continue maintaining the payout in absolute terms?
Yeah, we have our targets, which is payouts, which is minimum and maximum. Which is really board's guidance, and so we will remain within that. The targets that payout ratios are. I think we don't go below 1/3 and don't go above a certain level. Okay, we will remain within our board's given targets.
So you can expect the same range of.
Payout ratio will remain the same. Absolute amount may
We'll
change.
try to maintain that payout ratio. So can we take some calls from the,
Abdul Muqeed,
yeah. Ask to unmute and then.
Assalamu alaikum.
Islam.
Sir, my question is related to your deposit. We have seen that your deposits have declined slightly in CY24. And the reason you mentioned that you have shredded fixed deposits to avoid higher interest payment. So just wanted to ask, what is your outlook on deposit considering that you are on the very low base? So shouldn't it be like more than average or more than your historical deposit growth in CY25 and going forward?
So that's right. We have started growing deposits again. So it will be in line with our average growth over the years, what we have. So we have been growing deposits. We like a certain percentage mix of deposits. So between conventional, between Islamic, and then again, what would be fixed and what would be CASA. So we'll grow in line with that. That's the plan. And as I said, we have already started growing.
And what that number will be like percentage terms in deposit growth?
I don't think we can give any precise number because we don't have it.
Any range kind of number, like based on historical.
Yeah,
Trend.
you can say that based on historical, we'll try to
Go in the same line.
in the same line.
All right, sir. Thank you.
Next,
we have a question from Taurus Securities. Can you share any update on the consortium of banks likely to lend the government for clearance of circular debt? Would HM be a part of the consortium?
So as a bank, we are one of the large banks or mid-sized banks. So we are been part of that particular lending. So yes, we are a part of that. We as far as our risk appetite is concerned, we were not really large into this either lending to circular debt earlier, which was this power holding company. We had a very, very small relationship there. But however, yes, as a part of our banking group, yes, we are a part of that of the new bank.
We have a question from Farhanul Haq.
asked to.
Okay, my question is that your NIIs increased in fourth quarter. Was it due to reduction in interest rates and you had a positive impact on the repo borrowings from State Bank? And when do you see your NIIs decreasing? Because there's a repricing difference. Like on your advances, it takes around 6 months to reprice, whereas your deposits reprice a little earlier. So when do you see your NIIs decreasing going forward? In which quarter, I mean?
It would stabilize. Because as the interest rates are stabilizing, they're not. As the interest rates earlier, it was reducing interest rates. So therefore, you saw that what you saw in Q4, and some of that impact was also, as I explained, on.
We don't see any margin declining. That you can expect it in absolute terms. It declines, but not in the margin terms. So we will try to maintain that margin. So that's the answer.
Okay. Secondly, I want to ask that your admin cost increased in the last quarter. Was it due to increase in salaries? And what do you see going forward since that the tax rate on salaries have increased and you have to increase your salaries to retain your employees? So what's the guidance on admin expense going forward?
So it's the increase is because of IFRS 9 adjustment on the loans to staff. So you can see that basically that if you exclude that adjustment, the difference is not that much. So it is because of that IFRS 9 adjustment, which will going forward, it will not be in a last quarter, and then will obviously over the years you will not find any differences on that.
Okay. And on your textile portfolio, like you said that your admin expense are tilted towards textile, and given that going forward there are headwinds in textile, given their cost of doing businesses has increased manifolds, their energy cost has gone up quite significantly. So how are you mitigating that risk?
So on the textile portfolio, as you mentioned, we are managing the overall concentration and we reduce the concentration over there. But additionally, I think what we do is we have a very robust, portfolio management and underwriting system in place, which includes the textile industry. So, whether it's the impact of Red Sea disruption on our textile customers, whether it's increasing energy prices, etc., whether it's change in cotton prices. So we all measure that very, very carefully. And then in terms of a customer selection, I think there's a constant process to support our oldest and strongest customers out there. And whereas on the weaker ones, we prune our exposure out over there. So as dynamic risk management is the way we manage it, while overall keeping the concentration in control or reducing it.
As I think what his question on energy, that's also more towards spinning sector.
Yes.
They are more exposed.
So we do see more stress on the spinning sector over there. Our concentration over there is 7%, so it's much smaller in terms of the overall pie. And over there, I think we have a lot more conservative stance on the spinning sector in general.
This is we focus a lot on exports, so you see we are mostly exposed to the vertically integrated where exports are increasing and they are able to pass on the cost as well. So I think the portfolio is quite tilted towards the vertically integrated units, so we do not see much impact in our portfolio.
My next question is regarding the asset management companies. Other banks have ventured into asset management and their sizes have grown tremendously. Now asset management companies are almost size of a mid-sized banks. So do you have any future plans venturing into asset management, or would you stay away from it?
At this point, there's no plan of opening an asset management company, but obviously we don't know if that changes. And that's a really long strategic decision. At this point, there is no plan of opening any AMC.
My last question, can you repeat your portfolio of PIB? I didn't got your point over there. Can you give a breakup on how much fixed float of PIBs you have?
So basically, out of the total portfolio, 55% is fixed and 45% is floating. That 55% includes T-bill. So if you take that the T-bill portion out, the residual fixed portion is close to 38%. It has an average life of 1.8 years, and the yield is in the range of 13.75 and 14.25.
Okay, thank you.
We have a question from AKB Securities. What is the proportion of Islamic deposit as a percentage of total deposits? Plus, does the bank intend to further increase the proportion of its Islamic branches?
Islamic deposit is similar, which is about 20% or thereabouts roughly of the total 18-20%. Intend to further increase proportion of Islamic branches. Yes, we do have a plan. As I said, even in ABP, next are new branches which are opening, and many more in Islamic. So yes, there will be more Islamic branches.
Next statement. Sit on.
But I think somebody else there was a raised hand.
He's already asked already. Is there any other question we can respond, or else we can just.
We have a question from Paranal Shah.
Oh, yeah.
In the trade finance, do you focus on funded or unfunded?
It's a mix of both, I think. On the import side, obviously, for our exporters and our importers, we take care of all the import needs, which leads to us using the unfunded facilities. But then, in terms of working capital finance, we provide, trade finance facilities also. And so I think it's a good mix over there.
The customers require a lot of non-funded facility also. So the question is relevant because Pakistan this year has imported a lot of cotton also. So yes, we are, and then there are customers' requirements for guarantees and all sorts of other instruments which are non-funded. So we support them in both. So,
Do we have any questions?
If there isn't, thank you.
So thank you very much. ये रमजान के लिए अच्छा है ये so that's up next time definitely Ramadan will come. Last year it was not in Ramadan. There were many more questions. So anyway, so thank you very much. I really appreciate all of you dialing in and listening to us.